Brian, great to have you on. Thanks a lot for joining us today. And I wonder, as you sit here, I mean, the administration, the Federal Reserve, most economists have not been correct in terms of expecting inflation to ease to this point. The stubbornness of these high readings is out there. What is there, if anything, in terms of tools for the administration to look toward at this point? You've already released, oil from the Strategic Petroleum Reserve. You've tried to loosen things up at the ports, and yet here we sit. So is it just up to the Federal Reserve at this point?
Well, a big piece of this sits with the Fed, and as you know, the best thing that we can do is give them the independence to operate, and so I won't engage in the type of speculation that you were just talking about with Mohammed on that front. But on our side, we have a couple of very clear things we can focus on. First, anything we can do on the supply side here to help ease bottlenecks and increase labor supply. So you saw in that chart you just showed cars. Big impact on overall headline inflation over the course of the past year. We know the problem. We don't have enough semiconductors to build enough cars here in the United States to meet demand. So we're working with Congress, we're working with industry players to try to boost semiconductor production, and in particular do that in the United States. The second thing we can do is to provide some direct relief to families on the prices and the costs that they're facing, and do that in a way that doesn't add to inflationary pressure because we fully pay for it, and in fact reduce the deficit. In the meantime, the president is in Virginia today talking about prescription drugs as just one example. There's a proposal in front of Congress that would reduce prescription drug costs by allowing the federal government to negotiate for better prices and also cap out-of-pocket costs to provide some direct relief to consumers. Those are the kinds of steps we could take right now that would help to provide some relief to families without adding any price pressure. That's the kind of thing we're focused on right now.
And, in the past when we've discussed this and, the elements of the Build Back Better plan were sort of on the table in a more direct way, there was a sense that longer term it might restrain inflation. But are there measures that you even think, you could propose to Congress to ease things up, whether it be in terms of directly targeting prices or just expand consumers' ability to withstand these price increases, whether on the child tax credit front or somewhere else?
Well, that's exactly what we're talking about. I mean, lowering prescription drug prices would ease some of the consumers' burdens. Lowering the cost of child care would do both. It would reduce a monthly cost that a lot of families are facing, many times into the thousands of dollars, and it would also help get more people to work, more parents to work, particularly women who have been out of the labor force because of child care responsibilities. So these are the kinds of things that we could do that are practical. They could operate right now. We had the CEOs of the largest utilities in America here yesterday, and they were underscoring that passing a package of clean energy tax credits would allow them to move toward renewable energy while passing direct savings on to the consumer, lowering utility costs. That was the second in the chart that you showed. We have a practical step we could take here that would reduce utility costs while accelerating toward renewable energy. So many of these proposals very practically would address the issues at hand. And again, if we pay for them, then we're not going to be adding to inflationary pressure. And in fact, the president has been encouraging for some time that we could do this in a way that would actually reduce deficits.